We have plenty of data in between around the world, but it still feels like all eyes are on Friday.
Yeah, and I think it's very clear to understand why. We saw the jobs figures back at the beginning of August prompting that massive sell-off. We've obviously come a fair distance from there. The markets have stabilised. Everyone was listening to Jerome Powell talking about kind of being almost time to adjust rates. So this jobs print is going to be crucial from that perspective. But the thing that I'm really watching for in the markets around that is going to be the dollar. We've talked before on this programme about kind of how sort of the bond market has already had a big rally. Stocks are kind of near record highs. Like they're kind of predicting a soft landing. Everyone's maybe got a little bit ahead of their skis on that front. But on the dollar side, we've started to see declines. We're about 3% down from our peak back in late June, early July. And we've just seen traders flip from being long dollar, expecting more gains, to being short. We've now got about $10 billion worth of positions, positioning for a weaker dollar. That, to me, is significant because it shows you that everybody is finally gearing up for these rate cuts to actually happen, as opposed to just talking about happening. And I think, when we kind of look towards the jobs print, it's going to be very interesting to see whether that kind of confirms that trend and we see the dollar move further, because it's really one of the few markets that has a lot more room potentially to run.
Well, I think the CFTC data was fascinating at the weekend in terms of what it told us about how kind of positioning is moving. And it does finally seem like it's moving, as you say. But the euro is... There's a move in sterling, there's a move in the euro, much more positive positioning taking place there, despite the fact that actually when it comes to the euro, the politics doesn't look very good right now. Is the market just going to ignore what is happening in France, Germany and the politics and how concerning that could be? Because when we got that French vote, we did see a more negative reaction, but we're not seeing that now. So it feels like the dollar story is much more dominant.
I think that's right. And I think, you do tend to see monetary policy trumping politics in most situations. I think where the Germany results are very interesting is obviously these are regional elections, but we do have kind of a broader federal election next year. So this gives you a sort of taster of some of the issues and some of the parties that we're going to get much more familiar with as we head into that. And as you point out, we did see kind of with those French elections, a real sense of risk in the market and a broadening of spreads. The interesting bit to me there is that, with France, we were looking at the spread of French bonds to German debt. Now, if we're looking at German bonds and potentially the risk there increasing and yields rising as we head into that election next year, what are we going to look at that in comparison to? It'll be treasuries, exactly. But when you have like Europe's basic risk-free assets starting to kind of look somewhat risky, that becomes an issue in terms of how you price the rest of the debt in the region. So one to watch.
Does that show up relative to UK gilts, though, as kind of being maybe not the long-term kind of risk-free safety place, but the short-term safe haven almost very quickly?
I'm sure the UK government would love that. That's certainly been a message that they've been trying to kind of like push forward, that they are kind of a market of stability. But yeah, I mean, obviously there's a lot of room down the road there. We've got a budget coming up in October, so we'll see how that goes for the UK.